How to read price action and play supply and demand. So I'm going to show you guys a very simple way that you guys can naturally start reading price action on stocks, on futures, crypto, whatever it is that you little heart desires to trade. So what we're looking at here for the purpose of this video, because I actually played NVIDIA today, we're going to look at NVIDIA's 5-minute time frame. Now, there was a couple of areas that we kind of need to be aware of, right? That $451.50 mark, that's the pre-market highs. That's also correlating with the level from yesterday. That was the yesterday's high price, right? So we have yesterday's low price sitting down at 436. We've got the high price sitting at 451 and some change. So what we're looking at here, if we're going to play aggressive and we're going to play, where we're going to just jump these stocks right off the bell. Some of you guys are very impatient. You guys like to take the first move. The only thing we would be looking to take here is breaking yesterday's highs as well as pre-market highs. As soon as we confirm that price action, we got to get in. So if if NVIDIA's average true range on a candle is anywhere between $1.50 and $2. If we make $1.50 or $2 in that scalp, we got to take profits. We got to take profits. Okay, it needs to be that fast, like where we identify the purple line is yesterday's highs, the dotted line is the pre-market highs. So again, candle, the bell rings, candle starts, we break those highs, boom, we're in. We set a 1-bar stop. So wherever this candle opens up, we're going to use the previous 5-minute bar as a stop, or we're going to use the current bar as a stop. So 449.80 would have been a stop. We get a close below that, we go ahead and get out of the trade. As soon as we get into this trade here, breaking over 451.5, we're going to look to take $1. We're going to look to take $2. And if you are ballsy and you take $3, get out. Please just get out. Don't sit here through this back trade, through the back trace, right? Like just $1, $2, $3. Please do me a favor. Please do me a favor. If you take a scalp off the bell and you make $1, $2, $3, please take your profits. Okay, so let's see the pullback. The pullback comes, we get rejected here initially at these levels. We fall all the way down to the 200 period moving average, then we put in a low. So where would have been our setup on the downside, right? Because how do we know that this candle wasn't going to continue higher? How did we know that this candle wasn't going to bounce off of pre-market highs and continue higher? We didn't. So the next setup that we would have needed to see was this one here at 6:50 Pacific Standard Time. We close underneath the 20 period moving average. Now understand that we have pre-market lows sitting here. So if we're going to use a 1-bar stop, 451 is going to be our stop. Our entry is going to be 448, right? So we're using a $2 worth of risk, almost 250. That's a big chunk of change that you're going to risk there. So keep in mind that if we do get the crackdown below the 200 period moving average and below the pre-market lows, we've got to take again on the way down. And what are we looking for? $1, $1.50, $2, just get out of the trade. So if we actually look at the entry here at around 447.89 all the way down to 444, it's $3, and the whole move almost went $4 down to 443. So again, it's kind of like, well, it looks easy now that it's already happened. How do you know that it's going to do that when we haven't seen the rest of these candles print, when we didn't know it was coming down there? That's the thing. You never know what the stock is going to do after you get into it. So if you're sitting there trying to identify the most perfect setup that's never going to lose, you will continue to fail. If you guys want to learn more to the strategy and where particularly you guys can find, levels of supply, levels of demand, where you guys can kind of set stop losses and have a little bit better understanding, join evolutiontraders.com or get in evolutiontraders.com so you guys can at least get access to, talk with myself and the rest of the team who's trading these stocks on a day in and day out basis, so we can help along the way. The next level that I would be looking for here is once we put in this low, I'm looking at this candle. I love this candle here. This candle here at an area of demand or an area of supply, depending on if we're long or short. This candle is going to make you a lot of money. If you can start identifying these candles, like when you have a drastic change in price where we go from a high to a low or from a low to a high, and then you get this reversal candlestick, we're looking for the next candle to confirm that price action. We're going to set a stop loss at the low of day. Now, again, is this trying to time the bottom? Not necessarily, because I'm not trying to time this bottom. 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 I love this reversal candlestick. This is an exhausted move. So red, 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 red. Might as well call this red as well. But this is an exhaustion move. Boom, buyers have stepped in aggressively. So as we get back into the pre-market range, get back over the 200 SMA, and then close over the 20 SMA, this is our new setup. What are we going to use as a stop? Your stop is going to be the pre-market lows, because if this was a bear flag, then losing this area here would have broken the bear flag down. Okay, so there would be no reason for us to be in the trade long anymore. This becomes your stop, this becomes your pivot, this becomes your entry, and boom, we get that move. Now you can take profits here, you can trail your stop higher, get a little bit of a pullback, we kind of ride the 20 SMA, and then as soon as we pop the pre-market highs on this candle, we trend sideways over previous day's high, which is the purple line, before continuing the next move higher. Now, if you missed that whole move, there was another setup that came here. Now, if you notice, once we broke this channel and we consolidated sideways, if we get another setup over the 20 SMA, we use a 1-bar stop, because obviously we don't want to be in a move that could be potentially testing this demand. We get in here and we ride this up for another $2 or $3. So again, it's all about analyzing data in real time and trusting your strategy and trusting your expertise on the price action. So if you don't really take trades and you are really kind of just sitting around looking for the best possible trade that's never going to lose, you're never going to have confidence in trading day in and day out. You're never going to have the confidence to be able to take these moves and just set a stop loss. You're never going to have the confidence to identify that this is holding a previous area that that was acting as resistance. You're never going to know that you should be taking this play long. You're never going to know that you should have set a 1-bar stop here and got in over on this candle. Okay, you're never going to know to take profits here if you took this trade, right? So it's like you have to start taking trades and you have to start learning what works. Like even right now on the live price action, so we put in a new high, now we've back tested the 20 period moving average. If we start taking out this bar here, then look for a move higher, right? Again, if we start to lose a 20 period moving average, then what are we looking for? A continued pullback into this area here, and then look for the bounce, right? And if you don't get that bounce and we do close back below the previous day high and the pre-market high, then look for a pullback into 44861, which is the 200-day moving average. And anything below 44861 comes down to what? The pre-market lows of 44729. Anything below that can start to test a lower channel. That's how it works. Stocks are going to trade from supply to supply and demand to demand. Start trusting the charts, start trusting your gut. And again, if you guys need more help, instead of spinning your wheels in the dirt, invest in education. And I'm not just saying that. It doesn't have to be with me. It can be with someone else. It can be through a book. It can be through various YouTube channels. It can be through a friend or a family member who trades. Just invest in yourself. Invest in education. Get around people who are doing this. Get around people who have experience. Start asking questions. Ask a lot of questions. Play very, very small size. If you have to trade one share at a time, trade one share at a time until you're comfortable getting in, getting out, getting in, getting out, getting in, then trade 2 shares and 3 and 4. That's how you're going to get comfortable playing price action. You're not going to get comfortable playing price action trying to guess, right? Trying to guess that we're going to go lower here and then loading up max size on 0 DTEs. You're not going to get any better just assuming that we're going to bounce here and we're never going to, come back down, right? Like you're never going to get experience if you don't know what you're doing. So in order for you to start knowing what you're doing, you're going to have to start taking trades on a day in and day out basis. And you're going to have to start asking questions. You're going to have to start investing in education. If you guys want to invest in some education, evolutiontraders.com is a great place to start. Again, it doesn't have to be with me. It could be with someone else. It can be with anyone. You can spend 1,000 hours watching various YouTube channels, and I'm sure you're going to start to learn something. So just start learning. It's all about learning and then implementing what you're learning. So again, hope you guys all have a great weekend. Hope you guys all made some money this week. I hope you guys all had a little bit better understanding of the market this week, and I'll see you guys all next week. Or for those of you guys who want to join, I'll see you guys on the inside.